Dots on the screen like disco lights, flicker and shine in the heat of the night. I got the groove, trade the dots and watch me improve. Yeah. Trade the dots, hit the spots, fund the prop, make it pop. Money, 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 oh, it's hot. Trade the dots, yeah, trade the dots. Spin that chart like a DJ wheel, up and down, it's a funky deal. Risk is a dance, it's a balancing act, but I'm moonwalking on this market track. Yeah. Fingers snapping, numbers tapping, groove keep flowing, never napping. Trade the dots, hit the spots, fund the prop, make it pop. Money, money, money. Oh, it's hot. Trade the dots, yeah, trade the dots. Cashing in, cashing out, shake it, scream and shout. Pockets fat, but I'm staying lean. I'm the king of the trading scene.
Good morning, good morning, good morning, good morning, everybody. We're just crawling into the room on, okay, cool. After the masterclass, which was awesome. A lot of you guys really enjoyed it. If you didn't get a chance to see it, I'm going to send out a video recording of it so you can watch it on demand. Hang on a second. I'm just trying to organize myself because I got so many slides open. Okay, just bear with me a sec. Okay, I'm going to clean up the thing. I got such a cool show for you guys today. I'm going to blow your mind. We traded all the setups. You guys know the pull away setups, the turn setups, and everything else. Today, we're just going to hyper trade. I'm going to do this with you today and tomorrow on just a super interesting idea. You're welcome to follow along or not follow along, but we are going to do the following. We're going to take every red dot we're going to take every dot in the dominant trend. Right now, the dominant trend is to the downside because we're obviously to the downside. That means we're going to take every red dot trade for 5 points and going to see what happens. I think you guys are going to be really blown away by how many trades we can put down and how many trades we can resolve. So item number one coming up here, $1.55 on the clock. If this is a red dot trade, purple dot, red dot, regardless, we're going to take this. So the idea is to basically trade this. Let me see if I can do this. Drawing tools, shapes, objects. Yeah. Let me see. Could I do this? Yeah. Right here. Copy. Right here. Can I do this? Oh, that was in the move. Right here. Copy. Just to show you on the charts the idea of how we want to trade this, right? You get the idea? I'm gonna short everything. And the key thing here is the 5 point stop. We're just going to trade very tight target, variable stops. See how it goes. 51 seconds left. This thing is falling through the floor right now. Gonna wait very much until the close. No ads, no averages in because some of these trades are going to be just massively large as far as risk goes. So I don't need to compound to the issue. But let's see if we can hit them. 27 seconds left. Waiting for the close of the candle before I release the trade. Very important to do that. 14 seconds left. At around like 5 seconds, I'm gonna pull the trigger. All right, short. All right, short over here. Target done. Boom, boom. See how fast that was? Ba-boom, ba-boom. Next, just chill out until I get a red dot. No, I said 5-point target. The stop loss is good. The stop loss for me is like 15 to the start, but the stop loss actually needs to be as large as the candle, as large as the candle back. So it's got to be we're going to trade large stop losses. That's why I'm saying to you, watch me do it, because inevitably, you're going to have large risk in these trades. And if you don't want to take the risk, you don't have to do this. Stop is going to be the previous candle. Yeah. I mean, we're definitely hitting some serious sell-offs here. But the critical thing, and I wish we had started earlier, because you could really, you could really see the development of this whole thing. You could have had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18 resolves, right? 18 resolves. Now eventually you're gonna hit a wall, and it's gonna bounce against you. But you remember, you're trading super small, so on the next one you could come in with a little bit of larger size and ameliorate some of the losses. My only thought is that when you're looking at these things, and when I have the R factor embedded into the new indicator, we'll be able to see what the R factor on this is really huge here. Let me see. It's not even working right now. Is it working? Let me see. Yeah, it's a 20 R factor. It's really, really large. Probably shouldn't be trading this, but for shits and giggles, let's give it a shot. Sell market. All right. Big retrace on me. Let's see if it gets me done. Flatten out. I'm just going to flatten myself out. That was a big retrace. I took a little bit more off the table. That's fine. I'm trading micro. This is ultra tiny trades, precisely because, one, the risk is big, and two, I want the opportunity to like if I get stopped out on like a 5R. The whole idea is we really don't want to be taking more than a 5R risk, but you saw this was like a 20R risk, right? I just took it because I want to show you the possibilities. The best way to trade this is when you have the tinier candles. These are just massive candles, right? On the market open, as Kathy was saying, amateur hour. But then eventually, we're going to, the vol is going to calm down a little bit. The R's are going to be like, 5 R's or less, and you're going to be able to just hit them. And then, even if you get stopped out, because you're trading such small size, you can come back with like 3 size and get it all back. So imagine you're doing 10, 12, 15 consecutive winners. You hit one loser, the loser gets repaired. Now you're plus 15, for the day. It's basically kind of like you can make $300 in 2 hours on 2 micros, which is an astounding amount of P&L for the risk that you're taking. You're taking virtually no risk, right? Because even if it goes like 10R against you, it's a $200 slip against you. That's it. That's the max risk you're going to take. But that's why you basically want to keep it to 5R or better against you. All right, here's another red dot. This one is a little bit more modest. Let's see what that shows on the trading view. By the way, I really cleaned up the table I eliminated a lot of the stupid volatility. So this is a 7R trade. So that's okay. It's within 10R parameters in this kind of a crazy ass market. We'll see how it goes. And then we can also have a lot of fun with some counter trend trades, which we did a lot of yesterday with Think, which was a lot of fun. I'll show you how those work too. They're actually kind of setting up for that. Basically, what you want to do is if you have like 3 consecutive purples in a row, right? It's grossly oversold. So if this stays purple, like if this closes purple, you want to be buying on this instead of selling on this, because the probability of a bounce is really, really high after you have 3 consecutive purples down, or 3 consecutive whites up. So same idea. You're really trading the edges. R is a very common term used in trading. That's a multiple of risk. So like, let's say if something is 5R, it means you're losing $5 for every dollar that you're winning. If something is, 1/2 R, that means you're making $2 for every dollar you are risking. I was watching this. I actually want to be a buyer here, not a seller. Because there's 1, 2, 3 purple dots. After a massive, massive sell-off, I don't even think it's going to give me a purple idea. Let's see. 9, 10. All right, I'm a buyer. I buy this. Maybe it's going to flush me down, but if it does, I'll be a buyer again. Yeah. I shouldn't have faded momentum that early. Let's see. Yep. Okay. It takes me out. That's fine. I'm buying again. Again, I'm doing the exact opposite of what I'm telling you to do, which is trade momentum. But this is because it's already a third of the fourth move. I'm just rushing. I'm rushing the trade. I really need to be patient with this. Okay, no problem. We'll get a little more patient. Oh, boom. All right. You see how fast that was? I was just a little bit too early. Damn it. I got to stay underneath here. Okay. Sorry, I'm just fucking around right now on this trade because I mistimed my entries. My instincts were correct. I was just too early on the move here. All right, hang on. So, buck 51. No, don't break the lows here for me, please. Now look at this. I started telling you I'm going to sell all the dots, and now I'm doing the exact opposite. This is the perfect do as I say, not as I do. Okay, this is going to just burn big. Okay, buy. Now I'm buying for sure. Now it's going to definitely work, of course, and I'm late. I'm going to buy more. Damn. 13 seconds left. No, I'm too early on this. All right. Buy. I'm just trying to time myself improperly. Sorry for the mistakes. Just to, have fun watching me. Don't do anything I'm doing right now. Wow, look at that. Wow, 3 in a row. We're really selling hard. All right, I'm totally wrong on this approach, and I just blew myself up. Fine, no biggie. I should have listened to myself and just sold the red dots continuously. I didn't realize we're going to be in such a massive down move. Absolutely confident that this one is probably going to bounce back, but now I'm going to have to go to my real account and actually trade small sizes. So let's see if this is going to work. So the right rule that I should be doing is if this thing stays purple on the close, because it's got 3 consecutive purples, I'm going to try and buy it on a dip. But had I just sort of listened to myself and sold all the red dots, we would have made money all the way down. Sorry, I'm just fucking around today. As I said, today is the day not to do what I. Fuck. Okay. All right. At least my real accounts, I resolved this properly. You sold and won 3 out of 4. Good for you. I'm glad you guys totally ignored everything I did. Good for you. Very, very nice. All right, 18 seconds left. Let me see if this stays purple. I definitely want to buy it again if it stays purple. I'm going to wait to the close. Okay, buy, and it should resolve again. Boom, and it resolves again. Okay. All right, at least on my real accounts, I made some of this back. I burnt the eval account, but that's okay. I'm going to get a new eval account right now to trade this. So the proper way was sell, 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 sell. You could have made all the money in the world if you did that. I kind of got stupid and I said, oh, it was selling off. Let me buy this. The most important part is the second part, which is that when you go the other way, when we start printing the buy buttons, the reversal buttons, you don't do shit. You don't do anything until you have at least 3 buy buttons in a row, 3 buy dots in a row, because on a counter trend, you need to really prove to you that it's actually going to counter trend before you come and engage. Like the high probability trades. In fact, you could say that you could do nothing and just not trade any of the green dots and do very, very well. Let me just let me see if gold is in trend and trading trend. Yeah, gold is also in trend. So let's go to like one of my real accounts. We'll trade gold a little bit more. And with gold, we'll go with a 1.4. So we'll just reset this to $1. And if I get dots, I'll trade gold to the downside too. But same idea with gold. Look at this: 1, 2, 3, 4, 5, 6, 7. All of these dots right in there. This is the only one that clipped you. If you had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 13, 1. If you think about that, that's really, really good, good structures. That's right. Steve is absolutely right. As I say, do as I say, not as I do. Right. Anyways, the interesting thing is you see how quickly you can burn the account if you just stay stubborn on the market, right? Just counter. I love to counter trend trade, but it's just always the stupidest thing in the world. Just always the stupidest thing in the world. All right, let's see. Let's see if I get any dots on gold. Gold looks like it's kind of just done right now for these trades. Everything just dipped, right? I mean, we dipped big time. Let's see what Nasdaq is doing. And Nasdaq is also just consolidating a little bit. Yeah, it might be up, but here's what I'm trying to tell you. I don't care if it's up unless I get 3 dots in a row. I'm not even going to consider any kind of up trades. Nothing much going on over here. While we're doing this, I'm gonna open up. By the way, guys, very, very easy to get the Apex accounts. Just simply, let me just show you how to get the Apex accounts. We're gonna go here. I'm gonna log in. You need the authenticator. Some people were asking me, how do you get the authenticator app? All you need to do is just Google authenticator. It's Google authenticator, and then the first time you see it, it'll have like a little QR code, and it will automatically set you up. And then it will create codes for every single website that you have. So this one, I have like this for about 1,000 different websites. All right, let me confirm in here. Oh no, sorry, I'm the wrong one. The only problem is sometimes I get confused on the codes. 935 625. Oops. Okay, cool. All right, I'm in here. I'm gonna go to wealth charts, 50K, right? Right. Coupon code. Make sure you use the word PK save. Oops. And just click this. These 2 things you need to click, and you're good to go. All right. I'm going to take this off chart so you guys don't look at my credit card info. and this thing is going to generate an account for me very, very quickly. Okay, awesome. So I promise you, I will only trade trend with you guys in this account. All right, no signals anywhere. Remember, now we have counter trend signals. I don't even give a shit about any of them, unless I get 3 of these dots in a row to show me that the counter trend is real, right? Because you see 2 dots in a row, it fails, 2 dots in a row, 1 dot in a row. These are all very weak counter trend signals. The only time you get a decent one is somewhere around here, right? Somewhere around here, the 1, 2, 3, boom, that becomes a signal. Like 1, 2, 3, that becomes a real counter trend signal. Which sale? Nice black card, no limits. Let us see. No, you didn't see my card, right? I took this off, right? No, 90 Apex is not 90% off, unfortunately. It's 50% off right now, which is still a good deal, really good deal. But like that'll be I don't know when they're going to do the 90. When they do, I'll absolutely let you know. It's combo. White dots or green dots combo, Dave. Remember, white dots are green dots. They're just early green dots. Right? Just like purple dots are red dots. They're just early red dots. Yeah, it's still a good deal. So the other, by the way, lesson, because today is coaching. Those of you guys who want to join me in coaching, of course, let me put the link in for coaching. But actually, I'll tell you what, you don't want to buy coaching right now. This is the 1 week you don't want to buy coaching, because if you really want the best deal, you get the masterclass deal, which is this one. And what's really cool about why is this not working? Okay, here's the link. Make sure you take this link, because the reason why this is a good deal is because you can lock down BFF for a lifetime and zip for a lifetime. Coaching is only 6 months. So if you're in coaching, by the way, and you want to upgrade to BFF lifetime, that's the best deal. And that's Kay is only going to keep that for like, I think, a day or 2 before that goes away. So I'm going to leave that for you guys if you want to upgrade to the lifetime, because that is really the best deal. And then, if you want coaching with that lifetime, there's a very, very inexpensive add-on for coaching. All right, we're doing a little bit of a V-shaped move here on gold, on NASDAQ. Let's see what gold wants to do. Gold is just doing nothing. It's sticking around. No signals yet. We'll stay patient. Yeah, it does work very well with Bitcoin. I don't trade Bitcoin during New York, but I actually traded Bitcoin like on the weekend with it. You have to trade. So a couple of things with Bitcoin. You got to use the 5-minute chart, because it's too noisy on a 2-minute chart. And also you need, like, remember, Bitcoin is $50 to $35, $25 wide. So you got to trade for like a $200 TP, maybe a $100 TP, $100 TP. So $100 TP with the $300 risk is $400 risk, that kind of thing. So, and no one trades Bitcoin. Bitcoin trades you. Yeah. But it does create the same kind of runs, these kind of, segment runs. But you just definitely have to use the 5-minute chart. Will the government reopen? Will there be economic news today? I'm not sure. I don't think they said they're not going to release the employment numbers until next month. Yeah, somebody was telling me that BFF really works well with stocks on the daily charts, which I don't trade stocks, but that's really good news, because that's good to know. Okay, so two dots on the counter trend move. And again, I still think that the counter trend moves are not the right moves, but they're worth a shot. You know, we'll trade them very, very small here. Gold is moving up also, but that's it doesn't matter because gold is only just one dot or two dots to the good. We need to see three dots to do this. And even with gold, honestly, look at this piece of shit gold, three dots and it totally fails out. I really don't. I want to trade the shorts in gold until gold takes out the 200 SMA. I don't really want to trade gold to the long side. All right, we'll give this a shot. Very, very small. Let me go to the 18 account. Or maybe, do I have this account already? Is that all set up? Oh, okay. Let's trade. Good. We'll trade my. We'll trade the demo account because there's no reason. I don't want to trade counter trend. Maybe that's what we do. I'll trade trend in the real accounts, counter trend in a demo. So so that you know, my risk profile is a little bit more attractive. This is a pull away trade, counter trend. You know, all things are good. It should give us a high confidence trade, assuming the dot stays, assuming everything else stays. 35 seconds. We're not moving until the candle closes. We're not even touching this candle until it closes. This could be number one fake out candle. It could die in the last 5 seconds of the candle. Oh, nice job on the counter trend trade, Bob. You went early, and now you're eating the early. You're eating the early bird. 5 seconds, 4 seconds, 1 second. All right, we're long here. I'm gonna have to spread this out because and we're done. Okay, so that was a nice quick scalp for virtually nothing on this. And this was 1, 2, 3, right? 1, 2, 3, third dot. Okay, so it proved to us that the counter trend may be viable. If we get another dot, we'll trade the green dot on this. Let's go see what gold is doing. All right, gold's got 2 dots. Since it's an eval account, I'll take a third dot on gold if I want to go the other way. But I'm not holding my breath. I'm just thinking about, you know, this whole idea of like, let's go for fixed targets, variable stops. I think, you know, if you're going to take every dot, you probably can't really give yourself. I think what you do is you simply trade with a 1 to 5 R, and you assume that when you have these, you either just decide, okay, these big ass candles, I'm just not going to trade, or I'm going to take them, but only with a capitated stop, and hope that I can, you know, the 5 R, which in this case would be like 25, right? 25 survives you, and if it doesn't survive you, then at least you're only at 5 R. And if you're like plus 13, plus 14 on all these dots, it's not the end of the world. But you know, you can't do 10 Rs, you can't do 11 Rs. Those are it's just insanely over-levered on your part. So you probably just have to do large fixed stop, small fixed target, and maybe sidestep the really big bars if you don't want to trade them. This indicator is called BFF. It's my own proprietary indicator that we trade. We got another dot, $1.39 on the clock. This thing stays live. We'll trade it again because, you know, the point being is that, yeah, you proved to me that the counter trend trade so far is working. Here, this is the Portfolio Max offer, guys. All right. I'll give you the direct link if you want. Take a look at it, please, because it's a really good deal. Nope, doesn't matter. The dot faded out, so nothing much going on over here. Let's see what gold wants to do. Gold has got a red dot. You can barely see it over here because the 40 is blocking it. But gold is a legit red dot. Let's trade this. But I just got to change the. Oh no, gold is 1040. Okay, that's fine. 1040. Okay. Waiting for the candle to close. So this is a dot with trend, right? Dominant trend is to the downside. If this holds, we'll give it a shot. 3-4 seconds. One, sell. Even though it's a green candle, it's a dot. I'm going to try and sell it. Let's see if I get the dollar move. Here am I. I'm right there. And we're almost there. Come on, baby. Touch me. There we go. And we got the dollar move. Okay. So, yeah, you can clip it. You can definitely clip it. Yeah, exactly, Wally. That's exactly right. That's exactly right. It was a 1040. With gold, I'm just taking $1. I'm taking $1 on gold. A point on gold, 1040. If you guys registered and for some reason had a hard time logging in, I just I have the file. I'll be sending everybody we're going to post it on our website. You're going to be able to watch it in private. So I'll send it to you. Probably. Actually, I'm going to speak to Carlos in an hour, so I might be able to send it to you by noontime. So everybody who registered, if your name is on the registration list, I'm gonna be sending you a what do you call it? Review file. I'm losing my mind right now. Sorry, guys. All right, MNQ. Let's see what. Oh! Look at this. Fuck! I missed the trades in Nasdaq. Okay, let's see if we get another red dot in Nasdaq. We're gonna stay on NAS because I really love trading NAS. Fuck gold for the time being. I mean, I know gold is okay and it's tradable, but like, the key thing about doing this is that you kind of want to do it in. Okay, you want to just focus on one instrument. Especially, look at this. You got like 18, 19 potential trades here in Nasdaq that are all just money on the table. I don't want to lose any more money on the table, so I'm gonna trade this with you guys like this. Replay. Yeah, replay, right. Replay. The dot goes away. I was all hyped up to make a trade here. All right, dot staying in place. $22 seconds left. Let's see what it wants to do. No dot. Okay. No dot, no trade. All right, so here's an interesting, and I honestly don't, I'm just kind of making this up as I'm going along because I really don't know, but it would make sense to me. So you see this? Let me do a zoom in. Okay, so the slope continues to be green, right? It's essentially the same trend slice. So because it is the same trend slice, we do have three positive dots, 1, 2, 3, right? We had an interruption of the reds, but the very fact that this is a positive trend slice, it's a legitimate trade for us to go to the upside because it's not a, we want three dots in a fresh trend slice, and this has not changed. The trend slice remains green, so you could say, yeah, if this holds over here, if the dot holds, it's a long for us. It's a counter trend long, but it's a long. Twenty seconds left. A big pop here. All right, long into the trade. Fortunately, it's just a huge candle, so I really don't have, and this is why I'm doing it on the eval. Let's see if this gets me done. And I guess it does get me done. Good. So, that worked nicely as a counter trend trade. And we're still essentially, 5 dots into a counter trend move, clipping away. As I said, I think trading the trend slice of it is much better, but we may be in a counter trend slice for the next hour. I don't want to keep you out of trades. Getting a pull away trade. I mean, all these things are relatively good. Like it basically looks like we're making a V-shaped bottom here in NASDAQ. The one thing about like doing it this way, it's very, very simple. You really, you don't like, I overthought all of my trades over here, but you don't overthink any of the trades. It just becomes very, very clean. If it's not a dot, you don't trade it. If it's a dot, you trade it with really, really fixed stuff. Right, it's counter trend, not counter slice. It's a slice of pizza. You're right. You're absolutely right. It is the counter trend, not a counter slice. Guys, I think tomorrow, maybe later, like at around 9 instead of 8, we're gonna do like a micro marathon. We're gonna trade like between 9 to 11:30 tomorrow. Just go nuts and just trade these dots in a hard fashion. Let's see how far I can run the eval on. So trade again here. Buy again. So I'm just trading the dot to see if I have continuity on this particular trade. Right. It's still a big move, very, very big move here that I'm extending on here. But let's see if it holds. The thing that as I said, the thing that I don't like is that this is a massive candle. So if I was trading off of my R's, this would have been like a 8-9 R, right? 94. It's like a 40. Yeah, it's an 8-9 R. It's a really, really big R. So both of these candles, I wouldn't have loved to have taken if I was doing it on Rio. But if I'm doing it on eval, it's okay. I'll if I eat this loss, it's a tiny loss for me. I can always repair it on the next signal. But the main thing you want to obviously watch when you're trading the kind of these the dot ideas is trend as your first thing, and then the size of the risk, because the proper risk, this is a trade that can easily work if you have the right stop on it. But because you force yourself into a fixed stop, I'm probably gonna get tagged out on this trade. It's just a good example of having a lot of variability. Yeah, I get tagged out. Okay, no big deal. So, not every dot trade is a trade if you're trading it for real, because you have to account for the risk. If the R is certainly greater than 7, it's too much of a trade, because this thing is probably going to run to target, but you've already got taken out because you took a short trade. See, like right now, it didn't even retrace to the bottom of it. You needed to give it yourself over here, but to give yourself that much room would have been a huge amount of risk. On the other hand, if this thing becomes a dot, this is a much more manageable trade, and we can go back into it. The trade would have worked fine if you had the right stop. Let's see if the dot holds. I'm going to wait till the candle closes on this because I don't want it to fake me out. But I actually like this candle. I think it has potential. All right, long. Look at this. Look how he jumped on the on my thing. Okay. Totally slipped me. Fine. It still got me done. I still got done because I knew this was a good trade. When it slides back but holds the highs, it's almost always a really good trade. All right, another potential setup for us for a dot. See, let me show you the. See, this is the only trade that all of these trades worked, and this is the only one that got stopped on the on just a shallow retrace. Otherwise, all the longs worked very nicely here. Minute 5 left. How big an R is this? Let's see. It's a 10R, really big R. I don't want to take this. Right, let me make sure that this is against the right. Yeah, it's the right thing. It's a 10R trade. 7R trade. That's actually, well, it's double to this candle. I guess it's not a 7R trade if it's this. 458. I guess it'd be okay. Let's give it a shot. Because I'm using the candle prior, that becomes a much bigger stop. But if you use the current candle, which is another one of those things, I'm going to make it R adjustable to either the current candle, or the candle prior. I think you can get away with current candle at this point. All right, I got long. Where am I? Stop should be underneath here. $75. Let's see if it wants to go to 80. We're gonna run it. There, we're done. Another good trade. Boom, boom, boom. So you see, like, super quickly, and this is the, this is on my eval, so I'm just doing tens. That was like $200 in the last 10 minutes, right? Just clipping. And just imagine, you just, because it's eval, you're getting aggressive. You could literally do like $1,000 in 2 hours. You're a third of your way towards target. What would be the right size and structure? I'll talk about this more in coaching, but I think the right size and structure for evals would probably be about 5s, not 10s. So like half a lot. So you're making 50 clips. You do those 10 times a day. That's 500. 2 or 3 days. You're close to funded with controlled risk. If you're doing it. Why am I not using TradingView? Because we have the indicator working on wealth charts, and I want everybody to. There are a lot of people who are using wealth charts. So I've been using TradingView for a long time, and also the TradingView indicator is not ready for prime time. So the R needs to be configured and all that kind of stuff. I'm just still putzing around with it. So I don't want to release it until it's fully done. Anybody take those those quick scalps with me along the way? Anybody take those 5s? I can't promise we're lifetime on wealth charts because I don't control wealth charts, guys. I'm going to talk to Rob. I'll see what we can do. I think we can do something like that, but it's really up to him. So I will ask him what he wants to do. I mean, I'm sure he'll probably, like, if you're using Apex, I'm sure he'll probably say yes. But again, I can't speak for him, so I will talk to him, see what he wants to do. But I can guarantee you 100% on TradingView. And even if you're using wealth charts, you can still use TradingView for the inputs. Can I explain R? R is simply trading lingo for risk fraction. So 5R means you're losing 5 to make 1. 0.5R, half R means you are losing 50 cents to make 1, 2 to 1, right? It's an inverse ratio, right? So if my R is a third, it's funny because the other problem is that there's no convention. Some people use it the other way around. Some people, if they win 3, lose 1, they say I'm 3R trade, right? It's so you predefine it depending on whether you're negative risk or positive risk. If you're negative risk, the larger the R means the larger the negative risk. If you're positive risk, that means the larger the R, the larger the positive risk. Just all that. All right. So here's an interesting setup. This is a positive green slice, right? Green trend, but it's a red dot in a counter in a generally negative trade. So let's just do this small. I know. Let's do like a 2 lot here, and we're going to sell this. Just to see if I can make the 5 on this. So I sold this. And I make the momentum. You see how fast that was? Now, a lot of times we love to do the opposite trade. We love to buy this on a dip because this is a sort of a value proposition trade. But as I said to you, I fucking hate value proposition trades because they turn a lot of times into value traps. Now, there's people in the room that love to buy retrace trades. I hate buying retrace trades. So if you bought this one here, it would have stuffed you. If you bought this one here, you already got stuffed on. In other words, I made money on the shorts. It may still turn up, and you may still be able to make money the other way. But I don't like to buy value bargains. It's up to you. I think momentum rules. So I don't want to be buying them when they're all selling them, even though I was doing that. I mean, I was doing it at the beginning of the day because I'm just an inveterate bottom picker. But it's just never a good idea. Like you see it every time I fuck up live, it's always because I'm going against momentum, right? It's really, really rare a day where momentum is just so poor that it stops me out all day long. It may stop me out once or twice, but it's never going to stop me out like 6, 7 times like it did over here on that little fucking journey to hell. That was this trade. All right, another red dot. 40 seconds left. We're gonna go. The dominant trend is to the downside. So legitimate trades. Let's do them. 30 seconds left. Dot's got to hold. I wonder what the R is on this. Oh, it's a 12R because it's 2 back. That's another thing. It's only probably about a 6R on this. So I'm actually going to do small on this. Let's see. 7, 5, 4, 3. I'm gonna wait till the candle closes. Okay, short. Let's see where I'm at. Okay. Still a big risk. The real stop should be above this candle. So like this is like one of those trades you probably shouldn't do, because like here I'm just going to put the stop over here just for proper stop procedures. But this is like now a 7R. Anyways, got done. All right. I can bitch all I want, but this is like the 5th of the 6 winning trade we did. I just simply did it a little bit smaller size. So again, the balancing act here, the art of the trade is the size of the risk, right? Do you want to take it, even if the trade presents itself, is the risk too big? And do you want to do the risk that I did here, which is where you were right on the trade over here, but you got stopped out on the right here. You were right on the trade, but you got stopped out on the retrace, even though the stop should have been over here, right? The white dot is an early green dot. The white dot, if you have a big breakout, but the prior green dot was, you see how the low of this one is lower than this one? That's what makes it a white dot, okay? If the prior green dot was much higher, this becomes a white dot. Conversely, if the prior red dot was much lower, this becomes a pink dot or purple dot. It's just simply the earliest flip the other way. All right, 9 seconds left. We still got the red dots. Let's see if we want to run them. This one is not so bad. Let me see. What is this? 21. Yeah, it's not horrible. Oops, shit, sorry, I'm not paying attention. I got in a little bit late. Let's see if this is going to work. Nope. It's a legitimate stop here. So if I get tagged, I get tagged. I have a very small size on this precisely because I knew this was like the 3rd or the 4th move inside of it. And I get tagged out. Now do I survive it? Still surviving the stop. Now look at that vol. I'm going to flatten myself out. Just too much vol. It's really bouncing around. It's not breaking the lows of this candle. No point. No point of putzing around. I took a tiny little loss on this. It's fine. The whole idea of these trades is there should be continuation. If there isn't, get out. I'm happy to wait for the next one. If the next one is going to give me a red dot, they're going to reestablish the downtrend. Great, but let's see how it plays out. All right, it's 10:30. Let's take a look at what gold is doing with itself. Gold is also, it's interesting. Gold and Nasdaq, same thing, kind of thing. They got stalled on these shorts. New fresh short on gold. The other interesting possibility, if you want to just kind of give yourself more volatility room, is you could, during real-time hours, right, when New York is open, and especially when you have such big volatility, instead of going for 5 targets in Nasdaq, you go 10 targets. Instead of going 1 target in gold, you go for 2 targets, and that does 2 things. It gives you natural breathing space for moves. Then the thing is, you gotta be very confident you can make the 2 targets. All right, I'm short gold here. Let's see if I can make the 1 target. And we got it. All right, nice. So gold took the 1 target. Again, that's the art. Do you do you press for 2 because you want more room on the retrace, or do you stay short, but then your retrace are going to go. This actually probably in this time frame where you have these big moves, running for 2 would have been fine. I would have had I had ample room here. Let's see how Nasdaq is doing. So yeah, I mean, if you use like a 10, it's a 97. Yeah, you really like. I think you probably could go with a 10, 10 volatility. So 84. What is the short here? 70. Yeah, you made 10s. You would have made 10s all over the place. So that's probably the way to combat this. If you want the breathing room for the retrace space, especially when you have such, today is like a 200. If you have a 200-point move, I guess if the move up or down is above 150, right? Either way, in absolute terms, you probably can go into increments of 10. If it's less than that, you got to be trading in increments of 5. That's probably the way to think about this. As a volatility structure, and then it keeps you alive. But regardless of why you do it, it does put the P&L on the board, as you can see. All right, guys, let's see if we do one more. Do I use the DOM? I just watch it. I used to like do buys, sells on the thing, but no, the DOM just comes naturally with wall charts, so you can watch it. I don't really need it because I'm not. DOM-based traders don't look at charts, and chart-based traders really don't look at DOM. I'm a much more of a chart-based trader. So I think that's kind of like the takeaway from scalping the dots. We actually managed to hit, trading to my instructions. The only trade we missed was this one. This is the only trade that we missed today. So it means every single dot was a winner, was a winning trade except this one. And the only reason that was I kind of missed it is I should have been using 10. If I was using 10 as a target, I would have been able to resolve all of this, because because the retrace here was only 39 back to 13. You certainly you had a, you gave yourself 3 and you were fine. So I think that kind of the rule of thumb is before 9 o'clock, unless the range is really massive, you use the 5s, and after 9 o'clock, because it becomes U.S. range and you have range expansion or candle expansion, especially in the first 2 hours, you use 10s, and in gold you use 2s. I mean, gold is not really as U.S. dependent. Gold is volatile all the time. So if you look at gold, I mean, here you should have been using 2s all the way through, right? As a trade. You know what I mean by 2s, meaning 2 targets, 6, 8 stops, kind of a thing. Does that make sense, everybody? You guys following me on this? All right, let's see if we can do one more trade, and I'll try to. I'm gonna change. I guess I'll change. I'll change it to 10s. Twos on gold means $2 target. So the dilemma we face is that we have very good momentum signals, but every momentum signal is always subject to a retrace, right? Where sometimes it just continues downward and you make money, but a lot of times it will stop retrace, and we need room for retrace. And the room for retrace is always contingent on the room for on the room for profit, right? So if the profit is really small, you have very little room for retrace, and so you find yourself in this dilemma of like, oh, the trade actually went to my target, but it stopped me out before it got there because my stop was too tight based upon my short target, to retrace ratio. So the way to sort of solve that dilemma is to say I'm gonna widen my target, because by widening my target, the retrace ratio naturally stretches out, and as that stretches out, you're given more room. And the perfect example of all of this was the one trade today where we got clipped, which was this trade. This was a buy trade, right? But we were using a 5 target, which didn't give us enough room for the retrace. We got tagged out. But if we were using a 10 target, the retrace stop would have been somewhere over here. We would have survived it and made the money. So that's, oh, I gotta sell. Oh shit, fuck. All right, God, I'm frustrated. It's not your fault, guys, but like, every time I try to answer a question, there we go. At least I made the money. So that was a 10 wide target, and that made more money for us, which is good. Sorry. Final trade of the day does prove me, even though I fucked up the entry, but it just gives you a good idea. So I think that's the takeaway. That real market hours, New York hours, we trade wider both ways to keep those ratios more manageable, and pre 9 o'clock we can keep tight ratios, assuming that there isn't a big movement. I mean, really, it's not even pre New York hours, but it's almost too correlate. It's how much movement there is in the underlying. If there's less than 50 basis points, 0.5%, it's probably still tight candles. But this is like, obviously, when you're doing 1% on a $25,000 instrument, that's 250 points of movement. You need to go for the 10-point target, right? Does that make sense to everybody? All right, coaching tonight, guys. Coaching. If you want to join me, here's the link to coaching. 7 o'clock. Be there or be square. Hope you guys really enjoyed it. This was a good session. I mean, look, I fucked up the first account, but then I brought this one up by $250 in a matter of 1 hour. So, project that for 10 hours, and you're 2/3 of the way to getting funded if you're doing it the right way. So, hope you guys enjoyed it. Thank you guys so much. I'm gonna run because I got meetings, but we're gonna do micro marathon tomorrow. I'll post a link, and we're gonna do coaching tonight. So everybody be there. Thank you again, everybody. Enjoy. Oh, nice. I'm glad you did great. It's always better when you guys do great because that's what it's all about. I can take care of myself in my own hours. That's really good. Good for you. Asia, no Asia tonight, guys, because it's coaching. So that's what I was saying. I can't do Asia tonight because we have coaching. So join me for coaching. Thank you, guys. I'll see everybody later.